Hello everybody, good afternoon. For those who don't know me, online and on site, I am Kadri Lindberg, the Managing Director of the Estonian Private Equity and Venture Capital Association. And I'm super happy that we will continue with the Nordic VC Masterclass, which is now the third part of it. And for this time, we are talking about LP fundraising. And our guest is from Denmark, Nordic Secondary Fund, Henrik Juul. So happy that you could be here.
Thank you.
And for those who are online, I'm very happy that we had over 60 people registered for the event. We will have the recording as well as the slides later also available. So now I will give the word to you, Henrik, and we can start.
Thank you very much.
Thank you.
And thank you very much for inviting us to this event. I have a short agenda here, just a short presentation about Nordic Secondary and the team. Then I will tell a little bit about our journey, make some cases just to have a discussion. We are not that many in the room, but feel free to ask questions and we can see if we can solve these cases together. It's all about LPs. And of course, it's important to know what kind of setup should you make, business-wise, legal-wise, when you have to establish a fund. We'll come to a part with what kind of documentation which is necessary. And then number 8, investors LP, how to attract them. And then a little workshop about that. And finally, some takeout about what we have learned over the past 2 years regarding the environment and what we have seen in the market. So that's basically the agenda for today. And please feel free to ask questions whenever they occur. You don't have to wait to later on. Please do it so we can have a dialogue. The team in Nordic Secondary, it is founded by Peter Sandberg and Frank Lyne, both people who have been in the startup world, so to speak, for many years. Peter is also well known here in Baltic. He had invested in startup Wiseguys, so probably many of you know him. Frank is an entrepreneur, actually, at the age of 14. He invented the first electronic parking when you're parking your cars, and it set the time. He did it together with his father. He has also been in Topdanmark, which is the largest insurance company in Denmark, pension fund as well. Have been advisor in PwC and Deloitte. Peter has been working with asset management for more than 20 years. He exited 2 companies to Saxo Bank and made a substantial profit of that. So skilled people know the business very well. I'll make a presentation on myself a little bit later on. Then we have Julia, and then we have our investment team, Benedikt, Jonas, and Mads. Short word about myself. I've been in the bank industry for more than 25 years, focusing on, in the beginning, about credit and risk management, then asset management, and also for quite a period worked as investment banker. I've been working with the startup and fintech environment ecosystem for more than 10 years. My educational background is mentioned here, Master of Law. I have a PhD in Law and Economics, and now working as attorney at the fund. I was external attorney for Nordic Secondaries when we established it in 2018, and I joined the company full-time in 2021. What I'm doing is, I'm doing, of course, the legal due diligence, doing the negotiation about SPAs and so forth, and then when we are not in the Nordic, Denmark, Sweden, and Norway, we are using local law firms. Here in Estonia, we are working together with Cobalt, and of course, they are doing the legal diligence, and we have quite a connection when we are doing that. My background, the team's background, and then a little bit about secondaries. What are secondaries? Yeah, as the name shows, it's not primary, so it's secondaries. And what do we mean about that? We could say we are buying old shares, existing shares. We are buying that from founders and early investors to get liquidity into the ecosystem. They can use it, the founders, for new purpose, maybe sweeten their life, also investing into a new company or putting the money back in the company where they actually are working now. So company raise money by issuing new shares. Secondary, we are buying existing shares. Money goes directly to the selling shareholders, not into the company. And old shares do not dilute existing shareholders. And we will not invest in a company unless we are very welcome on the cap table. So that's basically the difference between primary and secondary. When and why should you use secondaries? Of course, as mentioned, liquidity purpose. Cash flow back in the ecosystem, or to sweeten your life. Most of what we are seeing is that people are investing back in the ecosystem and putting money back in the company. You can use it for rebalancing your risk profile. And what is quite important right now is you could postpone the IPO. I do think all have noticed it's quite difficult to succeed with doing an IPO now. So basically, when you are selling secondaries, you can prolong the runway if you're putting the money back in the system and wait for the IPO, because I do think it'll take some time before we have an IPO market again. Protect your investment interest and monetize your holding. So that's basically what are secondaries and why should you use secondaries. A little bit about our journey. Fund 1 established in 2019. We raised 50 million euro. We have 150 independent investors. We consider them as professional investors. In Fund 1, before deploying it, we have made 21 investments. I will come back to that. And we had, for the first year, 4 exits. Then we invested or established Fund 2 in 2021. We have raised 90 million. In that fund, we have 225 independent investors, also considered professional investors. We have, at this time, made 10, actually last week, 11 investment, and we have deployed a third of the AUM from Fund 2. We have some investment criteria that should be after Series A. It should be in what we define as New Nordic, meaning Denmark, Sweden, Norway, Finland, Iceland, and all the Baltic countries. You do not need, I can say it like this, if the founder is born in one of these countries, he's very welcome to have a company in the United States or UK. We will still be able, within our mandate, to invest. So that's the New Nordic region. Exit opportunities within 4 to 5 years. Target discount from 10 to 50. We have managed to get average 25%. Why do we need a discount? That's the business model, first and foremost. And also, we have to have a premium for the illiquidity. We are buying the shares now. The founders are getting liquidity, and for that we take the discount. We will not look into companies unless there's an upside to 3 to 5x regarding our investment. Looking, of course, like everybody else, strong founders, board members, and of course, what is at least as important as the other, that there is a strong cap table. And I do think due to the current environment, it's very, very easy to look carefully into the cap table. When we source deals, you can see, start with 500, we make due diligence around 200, and then we have these 30 investments. So you have to look at quite a bit, you have to look at quite a number of companies to get down to the investment we have done so far. Fund 1, as mentioned, 21 investments, 4 in Sweden, 10 in Denmark, 3 in Estonia. Maybe much easier to look at the map. Starting with Finland, where we have Varjo, Google's for the military industry. We have Pixie producing glasses where the lenses adjust, so you don't have to go to the optician to make new glasses. They will adjust Of course, it's under development, and then we have Bob W, as mentioned there, renting flats. In Estonia, we have Click and Grow. Actually, it's a US domicile, but they have head office here in Estonia. We have Fisi. We have Funderbeam, probably well known. Changed name now. I don't know whether the new name is public. I don't know, no, but they are working on that. And then we have Aurora, and the latest investment we have made is Cleveron Parcel, where you can pick up your gifts and whatever you buy online. So that's the latest. So and then in Latvia we have Mintas, and we have SonarWorks, very advanced microphones. Actually, investment, it's what you could call a shadow bank, Mintas, providing making people able to trade online. And then in Lithuania, we have Kilo Health, and what is not possible to see here is TransferGo. In Sweden, we have Challenger Mode, producing games. We have Naked within the industry for primary young female. We have Hedvig, which is an insurance company, and then we have Hyperworld, who is making digital shops, working for Nike to make an avatar, and then you can go into the shop. Quite interesting, of course, using artificial intelligence. And then Norway, only one. We have Unacast, who is analyzing data for various purposes. And in Denmark, we have Robot, which is a robot company, as it seems. We have GoMore, share company, renting cars. We have Norlease, who is portable lasers when you have bad eyes, and they have make equipment so actually they can go abroad only with a helmet, and then they can make surgery on site. Cat Vision, quite advanced system for monitoring heart. They are working out of US now. We have Goodiebox, which is a company who every month send gifts, gift to yourself with perfume and so on. We have Empirical Spirit, who is making high-end liquid, now moving to New York. Fancy bars, they are established out of Noma, probably heard about Noma in Denmark, the Michelin restaurant. We have Kubio, who is tracking people's activity on the internet and analyzing that and making sure that you have the perfect ranking. Then we have Fastbeat. Fastbeat is an internet provider, very growing in Denmark, providing fast speed internet. And then Room, domiciled in the United States, but making these soundbox where you can have meeting and have phone calls. So that's basically our portfolio. Why is secondaries more relevant than ever? I said it before, we have seen a dramatically drop in the IPO market. So what we see now is that our deal flow is definitely increasing, getting better and better deals, because people are waiting for the opportunity to make an IPO later on. And by selling secondaries, you will, as I mentioned before, put the money back to the company, and then you could prolong your runway. And you will not have to take a convertible note going for new investments, which to our understanding is quite tricky today. We see the same development in a global VC volume. Probably there's some new numbers here, but it has definitely reduced over the period of time. So that was a short presentation about the team, Nordic Secondary. And then actually I prepared that we should discuss what is the topic for today. And we can do it not going 2 by 2, but just discuss it here in the group. And I do think the participant online could type in if they have some question. I do think you will monitor that. Yeah. So let's just discuss it here. Given the fact I have given you about new Nordic Secondary Fund and the topic for today, how to get investors, LP, what would the best scenario be for what kind of investors should we attack? If you should give us some advice here.
Institutional investors.
Yeah.
Insurance company, pension fund, banks.
Yeah.
And also maybe ultra wealthy individuals.
Yeah, high net individuals. Yeah. What is the advantage with the industrial investors, pension funds, insurance companies? Of course, they have a lot of money. What do you see the disadvantage could be?
Slower.
Pardon?
Slower.
Slower, and a lot of documentation,
Yeah.
and a lot of rules,
Yeah.
and a lot of everything.
Yeah.
But especially what you are saying, long period.
Is it also correct that the optimal ones are someone who's not wants to take that much risk? They want to take some risk,
Yeah.
not as much as putting into like pre-seed fund.
Yeah. Yeah, definitely. When we are investing after Series A, of course, we reduce the risk. So we are also going for people who is not that risk-taking, but I'll come back to that. But definitely what institutional investors, they are not that speedy to decide. But of course, if they come up with a substantial amount, it's worth waiting. But also, I know you are from family office. What about them?
It depends on what kind of family office.
Yeah, of course.
Yeah, I would say some of them have very little risk.
Yeah,
The risk profile, some of them are really low, but some of them are okay-ish.
yeah,
So you have to know them individually.
yeah. It's difficult to see something in general regarding that.
Yeah.
Other remarks about who the optimal investor could be?
I think, again, this is maybe somewhat tied to the risk, but someone who doesn't want to tie up their funds for 10 years, to go out for, as you said, 3 to 5 years.
Yeah.
20.
Yeah.
How about corporate?
Pardon?
Corporate.
Yeah. Yeah, we haven't had that much corporate because what we did was to go after high net individuals, and then of course we have a lot of investors, and when we have general meetings, of course there's some work with that instead of having 10, but they understand the game, especially if they are organized as the majority of our investors in a Danban or Litban or whatever. They understand the game and have been entrepreneurs probably themselves. So yeah, but I do think we have touched some of the topics here. Of course, institutional can come with a substantial amount, but it takes time. They have a lot of requirement, and not mentioned yet, but they have a lot of requirement for reporting. So if you would have a smooth organization, smooth reporting system as we have, we are simply not the best fit for institutional at this time at least. As you saw, we are only 6-7 people, and that would simply not be enough if we should meet the requirement for institutionals. Any question from online?
No, just when someone asks a question here,
Yeah.
please repeat it.
Yeah.
So they
For
can
the, for the online.
Yeah, okay. I remember that. We will not go back. Okay. Then we will continue to what kind of setup, if you are, yeah, how I saw it. What kind of setup should you make, we make, regarding the possibility of attracting LPs, making the network, which is a topic for today. What we did was that we established the fund, the management company, I'll show it a little bit later on, as under the directive of Alternative Investment Fund. It is a European directive, of course. It is being implemented more or less exactly precise in the different countries, but there can be some variation. But what we did when we established our fund, both Fund 1 and 2, is that we are not licensed, we are registered with the Danish financial authorities. And then we can actually passport it to other countries if we would like that. To be registered and not licensed, you have to be below these two target one fund could not be higher than 100 million euro. And meaning that you can only, if it's at 100, you can only manage 5, because the next limit is 500 million in total. But it's normally done like this. If you are above 500 million, then you make management company number 2. So that's the way to do it. So to be registered, do not exceed 100 and 500, and you must not use leveraging. You cannot borrow money to buy more asset under management. You have to have it in cash with these numbers, 500 and 100. But of course, no fund without obligation. This is from the Danish Act of Managers of Alternative Investment. There is rules regarding how to react. You should, if the fund fails, you should take all necessary measures to eliminate immediate danger of loss and significant amount. And if you do not succeed, you could face a fine or even imprisonment. So that is governed by or controlled by the Danish financial authorities. And then, of course, you must not react negligent and careless. That will also be something which could be punished. So when you get this opportunity to make an alternative investment fund, you can go out to semi-professional people asking for money up to 100 million, 500 in total, but you are under some criminal act as well. So that's pro and cons with this model. Question, Ganga? Yeah.
Yeah. So did you look into our other jurisdictions as well? Luxembourg is quite popular to set up fund, or you just know we're Danish, we're going to do it?
Yeah. The question is, did we look into other jurisdiction, Luxembourg with the CCAR structure? And no, that we didn't, because what we learned is that most of our investors are investing out of Denmark, and I'll come back to the legal setup, especially with the tax issues. So that's probably why they choose Luxembourg, due to the CCAR structure. So no, we didn't look into that, but I know especially institutional investors are using CCAR to set up like this. But we didn't consider that. Our setup is that we have the management company, N2F Management. We have an investment agreement with Fund 2. And then we have the general partner, which is a limited company. And then we have all our LPs, and you can see we have 225, as mentioned in Fund 2. We have only one investor who are below 10%, or above 10%. And that is also one of the company who owns the management company. So a lot of general partners, limited partners, of course, and then the general partner established as, I do think here in Estonia, you have AS and then you have OU. So this is compared to OU. With a very limited capital requirement. So that's basically the setup. And what is important here is that the KS and PS, the structure of these companies are that the tax handling is not done within the company, it is with the individual investor. You get reporting for your tax in your own company, but there will not be any tax in Fund 1 and Fund 2. They are with the individual investor. And that is regarding CCAR, what is most important for them. Yeah. That's the setup. Then something to discuss again. You said, why didn't we consider CCAR? What could we have considered else in our setup? What would you do if we were in Estonia? What way would you proceed?
Governmental funding.
Pardon?
Governmental funding.
Yeah.
Not the EU, but the governmental.
Yeah.
Government.
And what kind of legal structure would you place the money in? Was that an OU or an AS?
You do the usaldusfond, which is basically similar what I believe you have in Denmark.
The alternative investments fund or things like that, yeah. So you will start with the government money and then you will go out to attract LPs after that. So you have the baseline covered by a funding from the government. Yeah. What will the optimal numbers of investor be?
As much as possible.
Pardon?
As much as possible.
As much or as many?
Yes.
Both as many or?
Vice versa.
Yeah.
As little as possible, as much money as possible. So
Yeah.
that your general meetings will
Yeah.
be easier.
Yeah. We are, after COVID, we do now have the opportunity to hold electronically general meetings, so that's what we are doing. I will recommend you to do the same because it's a mess to meet 225 people. It's basically not possible, but it's possible now to do it digital. So yeah, that came post-COVID. Government money, attract investors, as many as possible. Yeah, and also try to use what I mentioned before, the manager of alternative investment funds, so you have the regulation. Yeah.
But in your case, you don't have any government money. Is that because, I don't know, are there any instructions for you to get at the European level or Danish level?
Yeah, not at European. We could probably have tried to get it from who Kadri met in Copenhagen, called Vækstfonden, Growth Fund. But it's again, as you said before, it take quite a bit, and they have a lot of rules and regulations. So we were going to do it for high net individuals, primarily from the Danban. Yeah. Other remarks then, and how to set up. I do think we have covered, and I do not see anything from online. So maybe we just should take 5 minutes break so you can get fresh coffee. I can get something to drink, and then we will reconvene within 5 minutes. And the next slide coming up here is about documentation, which is quite important, of course, when you have to attract LPs. What we did in our fund 2 was we made an investment memorandum. The highlights from the memorandum is here. And what I would focus on here is our investment process, and of course also the part with the risk information. So, sorry for this being partly in Danish, I will translate. Our process is we looked at a target. We will make some initial investigation about the company. Where is it established? Who's the beneficial owners? Who owns it? So a quick legal check. Then we will send our NDA, and that's the manager, N2F Management, who does that. And then we will start with the commercial due diligence, looking at annual reports, looking at budgets, looking about the business model, have an interview with the management, and often visit the company so we can have a presentation on site. And if we decide that we will continue after the commercial due diligence, we will start discussing the ticket size. Our preferred ticket size is at least 2 million euro, up to 6 million. And then, of course, we come to the tricky part, the discount. What should the discount be? If we do agree on these terms, we will normally make a term sheet, and then we start the legal due diligence. When we do the legal due diligence, as I mentioned before, we will only invest after a Series A round. And that means that there is a bigger investor who have made some kind of due diligence, hopefully a good one. And in some cases, we can use the former due diligence, maybe buy it from the law firm who had made it, and then we can add a red flag due diligence on top of that. We will not go into looking at the contracts for the employee because that is made in the A round. So we can make a lighter due diligence. If there's no red flag in that, we will start negotiating the SPA. And we will, of course, when we buy secondaries, take the same share class as the seller, and we will not renegotiate a shareholders agreement. We will step into the company as it is. The latest investment we have made in Clearon is a 10% investment, which is the maximum we can invest. And due to the size of that, we have required a board seat. So I have the pleasure of joining the company's board end of this month. But that's due to the size of the investment. So we get closer to the company, so to speak. Also in our term sheet and in our SPA, there's requirement about monthly reporting. We will normally visit our portfolio company twice a year on site, and we have monthly, quarterly meeting with the management to follow up. Not in a specific supervisory board role where you control the management, but simply to get understanding how things develop. We will, of course, like to hear good news, but basically good news is no news. What worries us is if it's obstacle coming up. We would like to hear about them as early as possible, because due to our network around 300 investors, we will actually be able to even give them some know-how maybe, and ask our network if they would like to help the company with this and that. That could be a convertible note, a short-term loan facilities and so forth. So they should simply see us as a partner in this game, and that's the reason for being quite close to the company. After the legal due diligence, we got the SPA, then we make the traditional closing. When we have the investment report, we have the investment committee deciding whether we will do it, and then we have the legal due diligence, and then the final decision is within the general partner in this construction, they are the people saying yes and no, and then we will go to the SPA and close, sign and close. So that's basically the system and what we are doing every time we make an investment. What is the period for this? Quite different. I can say that one of the fastest we have made recent is Cleveland. I visited the company midsummer, 14th of July, and we made the investment 2 months later. It was in some kind of fast track. And then if it's a simple transaction, we can do it maybe 1.5 months, and we have had transaction taking 6 months because the complexity was quite. So we do not actually have any goals for how fast and how slow we should do it, but yeah, as mentioned, Cleveland was a 2 months from start to closing. So that's quite fast. Back to what we are telling the investors. We have this section about risk, going from low risk to high risk. We are declaring this product as the highest kind of risk you can take, because you can lose all your money. So that is basically what we are telling our investors, and we have some further information about that. But we have set the scale as a 7 because you can lose all your money. Actually, you could say that if you are investing in bonds and so forth, you could also lose the interest rate. So basically, that's more risky. But we have decided to show that this is risky, and that's to make sure that our investors, as we say, they have to ask or seek counsel before they are investing in the fund. They have to understand the setup, and when they are investing, they have the ability, should have the ability to lose the money. So we have made that crystal clear. Documentation. Brief. We have a short investment period. As I mentioned before, our LPs, our investors, has the opportunity for making co-investment. Our investment period is 3 years. We can prolong it with 1 year. Then we have a holding period at 4. We can prolong that with 1 + 1. We have in both funds an AUM at 135 million. Have a management fee about 2% of the, not about, but 2% of the AUM. I can say in Fund 1 it was 1%. In Fund 2 it's 2 up in the beginning. And when we are going in the holding period, it will be reduced to 1.8, 1.6, 1. Until it reaches 1 again. We have a hurdle rate at 8% per annum. We are aiming after a 20% IRR per year, meaning that the investment will be tripled over the period of time. I do think I forgot to say that when I showed the portfolio that we had in Fund 1, 4 exits within the first year. So of course we have repaid these money to the investors. So that was of course quite satisfied.
Can I ask you
Yeah, please.
It's about the management fee.
Yeah.
Like 2 is considered to be the average, but I've seen 2.5. Like, what's your view on, especially for emerging managers, on management fee?
Yeah.
Because they need to build up a certain organization.
Yeah, exactly.
Especially if it's a smaller fund. Can you go higher, lower? What's your view on it?
The question is regarding the management fee is too average, or you have seen 2.5, something lower. And as you also mentioned, you have to build up an organization. And what we learned was that 1% in Fund 1 was simply not enough to do this building up organization. We simply have to have more management fee to make sure that we did it the proper way. We did the proper way in Fund 1, but it was simply too tricky. So our investigation about the management fee is that we consider 2% at market standard at this time. And the reason for reducing it after the investment period is that normally you will hopefully go to fund 3, 4, and 5, and then you will have cash flow again. But we also consider after the investment period that you have to reduce the management fee, because then you don't have to work that much. It's simply more administrative work you have to do after the investment period, just to make sure the exit. But I can say that when you have a portfolio like we have, around 30 companies, there is of course 30 general meetings, annual meetings in the company. You have monthly, quarterly reporting. So basically, there is quite a bit of work to do. So we have definitely convinced ourselves that it is necessary with the 2% in management fee, because you have simply to build up an organization who can absorb all these tasks. So I do think we will say that 2% is definitely market standard at this time. Yeah. Yeah, then a short case again, just discuss it here. When you are looking with your experience, what would you consider the most important information for the investors to make them happy, the LPs? What is important for them to know when you are making the report about your portfolio? We are simply now talking about the quarterly reporting from the funds to our investors. What kind of key numbers would you expect to be informed about? Only good news, simply. No, we are reporting on, of course, net asset value of the fund. We are reporting about IRR. How have we performed your money? What have we paid back to you over the period of time? So that's basically the 3 key points. So that's the first page in our quarterly reporting. Then we have a presentation of each portfolio company and telling how is the economic development in the fund quarter by quarter. So fund 2 with 10, 11 companies is a report around 15 pages. And what we understand from our investors, that we should definitely not provide them with more. That is absolutely sufficient. But you have to agree on these key indicators, as I mentioned, NAV and IRR. That is basically what they would like to hear. Yeah.
Maybe add, so I'm an LP in a North American fund that is doing strictly B2B SaaS investments.
Yeah.
They actually provide a live dashboard of their portfolio companies with the MRR graph.
Yeah.
So that's quite interesting view as an LP to what's growing, what's not.
Yeah.
You can start looking at the runaway companies, what they're doing, maybe writing interestingly. But the monthly report itself that they provide is quite light. Relying quite a lot on the
The remark here is that you have experienced that you are getting basically at a dashboard, so you can follow the development quite closely and actually online. So of course that's an opportunity as well. And of course, besides the quarterly report, we have the annual report audited by our external auditors, PwC. And of course, that is treated and discussed at the general meeting. So with 4 quarterly reports, 1 annual report, 1 annual meeting, general meeting, and then we have 1 or 2 investor days per year. So basically, our investors feel that they are quite well informed about how the fund is performing. And then, of course, we have to be very rapid if something is going different than we expected. And actually we had to do that yesterday, because as I mentioned, here in Estonia, we have invested in Aurora solution, and they filed for bankruptcy Monday. So of course, as soon as we heard that, we of course been in negotiation over the period of time, but then we of course had to inform the investors that that is a write-off. Sad, but that's how it is, and our investors expect us to come with both good news and definitely bad news, and the bad news actually should be faster than the good news. That is definitely what they would expect. So yeah, I do think that covers actually what is important to inform the investors about. But any question? Digital, online? No. Then proceed a little bit, then continue a little bit. If you would like some inspiration about what information you should give your investors, especially when you are fundraising, then we have also regulation for European Parliament called the PRIPS, going for package. It's package retail insurance-based investment products, PRIP. And basically what that document say, it's a key information document, KID. And they are telling you what you should tell the investors. We have a 3-pager because, as you see, it must maximum be 3 to 4 pages, but that's simply an overview about the fund, the cost, the risk, and other terms for your investment. So if you Google PRIPS or key information document, then you will get some inspiration about how others do this regarding what the European Parliament say that you should report, especially when you are in fundraising mode, because you have to understand what is important for the investors. So that is a part of the legislation from European Parliament. A little bit about our LPs and basically the topic for this session today. I have mentioned 155, 225 investors sometimes, but now you can see the correlation between Fund 1 and Fund 2, meaning how many people participate in Fund 1 who is also participating in Fund 2. And that's close to 80%, so that's quite satisfied. We have more than 100 our investors from Danban, Danish business angels. You have Litban, Esban, and so forth, so that's basically the same. And the advantage with these type of investors are that they have more or less been early investors themselves, maybe exit a company, so they know how things work. We have also succeeded in getting some family office in our investor portfolio. We have, as I said before, no investment from public funds, and I also mentioned why. And the way we have done it is that it's simply mouth to ear. I'll come back to that. And try to make it by invitation only, actually. What we did, and I'll show you a little bit later, sorry it's Danish again, but I can translate. The category 1 is professional investors, defined in the MiFID directive, equity, asset, revenue. Then, according to the manager of alternative investment funds, the regulation about that, you have the possibility as an investor to say that you would like to be treated as a professional investor. That is one of the advantages by using the alternative investment fund regulation. That is what you call semi-professional. Then you do not have the protection as you were an individual. So if you ask and sign for to be treated as a professional under the Act, you will be considered as a professional. Then there's a special rule. If you are an investor working in the financial sector for more than 1 year, you are also qualified as a semi-professional investor. And then we have foreign investors. We have some of them in our fund, less than 5. But what we have looked into there is that to make sure that they are under the protection as we have in Denmark, either they should be an alternative investment fund, then of course they can be considered semi-professional. And then we have the last category, that could be high net private individuals, not investing through a company, but investing as a person. Then they have to sign a declaration that they understand the risk of investing in such. So that's basically the 5 categories for our investment investors.
Can I
Yeah.
ask a question about this as well? So you have quite a lot of LPs. Would you prefer fewer? Would that make, what are the pros and cons having such a high number of LPs?
Yeah, there's not a simple answer to that very good question. Of course, it would be easier if there were only 10. It would be easier reporting. You will be easier to have a direct dialogue, but it will also come with a lot of requirement to reporting if they are the industrial investors. So what we like actually is to have this number we have now, because we have, even though it's 225 in Fund 2, we have a quite close dialogue, and we can reach out to them if we are looking at some business that we are not very well about. Then we know Peter from down there, he knows something about that. Without compromising our non-disclosure agreement, we can ask for advice. And we can also use this network to reach out if we know more or less what are their interests. So if we have a company maybe too early, say, should we connect you with this and that? And then they could do it without the fund. And actually our investors like the opportunity, because we have been in the business for 5 years now, and we have quite a good inflow, and we get a lot of deals, meet a lot of interesting people. So basically, they are happy to know that we will think about them when it comes to this and that. So actually, we like the numbers we have here. I do think when we started this, we expected not that many, 50 or something like that. But basically, it's not a problem. It's mainly practical issues, as I mentioned. It's necessary to have the annual meeting digitalized, because it's very messy to meet with that number. So basically, we like the numbers, and especially the network we can use to give them some opportunities, and they definitely like that. Yeah?
Do the Danish regulators have objections to sort of mixing the professionals and non-professionals in a single fund? Are there any restrictions on market things? Do they need non-professional ones?
The question is if the Danish legislation have, or the Danish rules have, something which could compromise the way we do it. And the answer is no, because we have decided to use the act of manager of alternative investment fund. And actually that is the rules for them, that you can ask to be treated as a semi-professional. And then there's this funny rule, if you have been working in the banking industry or something, you can do it. So no, that is totally aligned with what the legislators say that we should do. So no problem at all. And that is, of course, one of the advantages to do it within the manager of alternative investment funds. First part of our LPs. Then, what we have done, definitely recommend that. Take time, but it's definitely worth it. What we're showing here is that we are categorizing all our investors. We get, and I know that especially here in Estonia, you have a very transparent system. You can go to e-business and get all the information. We have more or less the same in Denmark. So what we have registered is of course, all our investors. What is their equity base? What is their asset base? And what is the solvency ratio? And we do it before approving them as investors, because we will make sure that they can lose the money. Because, as I mentioned before, it's the risk, it's 7. If you lose the money, we do not like people to cry. We will make sure that you have the capacity to lose this money. But it also gives a sense about if we should out and offer them participate on the side in a new deal, who should we contact? And that has been quite useful. And I can say that our investor base, if we sum all this equity up, it's more than 10 billion Danish kroner. That's roughly 1.5 billion euro. So that's investors with a substantial equity, and that's nice to know and good to provide them with the relevant information. Regarding the question how to build up this LP network, it could be considered as a joke, but it isn't. We have used email, writing to people who have shown their interest, because we cannot contact them directly because we are not permitted to that. Contact people and ask if they are interested by LinkedIn. Peter, my colleague, I do think he has more than 35,000 connections. Happy it's not me. But he is very active. And then a lot of phone calls. And during COVID, I do think Frank and Peter had more than 1,000, 1,200 Zoom call with investors. So that is simply very tough work. But you had the connection before starting the discussion, because otherwise you will just go through database and cold canvas, as you will. Yeah, I do think it's a well-known term, and that's simply not efficient enough. So this has been quite efficient to do it like this. But I can see both Peter and I are above 60, so of course we have been around the block sometimes, and we have a contact net, and of course it's useful. But if you do not have that, you must do it in some other way. And that could be like this. I will just take a question here. How often do co-investors happen with your portfolio's investor base? Is co-investment possible, important for your investors? As I mentioned before, they have the opportunity. It has happened less than 10 times. But we know that they like to have the opportunity. They like to get the offer, and then they can decide what to do. So they are using it, but not that often. It's more add-on, and they like to have the opportunity. Yeah. Then back to this, if you don't have gray hair and start all over, then of course you can go to different databases looking for the wealthy people. Forbes, you know, United States, they have this list every year. And basically that is also from Forbes, this one still in Danish. Anders Poulsen, he's the one with bestseller. And Kirk is the Lego, you know, bricks building family. And then Coloplast, they get a lot of offer every day. Actually, they hire a family office to say no. We will not, please, to guide. No, we will not talk with you.
I have a question.
Yeah.
Is in Denmark there any publicly sort of findable information about LPs of the funds? Like, I don't know, reports of pension funds, or in Finland, for example, it's public, the LPs?
Yeah.
Or any other places you sort of could look for that information or not?
It's not public in Denmark. I can say that our share register with the 250 and 225 and 155, it's secret. We will not. So the other investors do not know unless they come to an investor day. Then we have decided that they accept to see the name and the company. But that's basically, there's no publicity about that. You could maybe use Crunchbase to do something like that, but you have probably to be above 5% to be registered there. So all these minor LPs, it's quite difficult. And that's probably the reason for people participating in Danban, Litban, Esban, and so forth, because they meet people who have similar interests. So there's no publicity or public about that. But Forbes, and then there's also the system BIG. I do think it's in different countries where you can search if you have this name, and then you can make it 360 degrees, it's called, to see who is connected with whom. So that's basically tough work, cold canvas, hard work, if you should try to establish who to meet at this time. But that's basically the other way around, unless you have a good network. I made some other example, Orbis over Pittsburgh. This one is Orbis, it's Bureau van Dijk. It's also the company which are very well used regarding KYC and anti-money laundering. If you type in Denmark, asset below 100, you will see that there is 60,000 companies, and then you can get them listed here. So that could be a way to do it if you would do it in more or less a smart way. And of course, you don't have to print it out. You could probably put it in an Excel sheet and then try to go around. But it's a tricky part because I don't know, is it public in Estonia? Who knows? So it's the same problem.
There's places to sort of find it.
Well, in Estonia, Global Financial Times basically publishes the list of top 500 most rich people.
Yeah.
So it's pretty public.
Yeah.
And on the FD side, I mean, there are like pension funds reports that
Yeah.
you have to dig in, but you have to dig in.
Yeah.
But not,
So it's not that easy in Estonia either. So it's
but very many funds use Pitchbook.
yeah.
I know,
Oh,
Yeah.
still Estonia is probably one of the easiest countries.
Which one?
Still Estonia is probably one
Yeah,
of the
yeah, okay,
easiest
yeah.
countries to find information about.
Yeah.
It's so small, we have the usual suspects that might be.
I am from our local law firm now learned to use e-business, or what it's called, your register. It's simply impressive. I do think Denmark is quite transparent, but definitely not as much as here. It's simply impressive. You can get annual report here. You know, also see if you are in arrear with tax. that's quite impressive. So yeah, I do think that's a hard way to do it, but of course doable. You have to start one place, but that's just some example about what to do regarding how to attract or attack LPs. Yeah, I do think that is basically to wrap up what we have been talking about, but we have tried three cases, so maybe we should ship that workshop now. And then, of course, I would like question, but I would like to share our lesson for the past 2 years. And please feel free to interrupt and also ask questions, because that is, of course, what we have noticed. The first one, of course, is, as also shown in one of the other slides, that venture finance in 2023 is reducing quite a bit. That raised some other issues. Saying or meaning that if you as a company do not have the sufficient runway, you have to attract bridge finance. Being called everything from safe loans with and without convertible terms. We have seen new investors coming in after the common shares, saying we would only participate if we get a new share class. Also, normally combined with preference participation, liquidation preference with and without participation. The toughest one we have seen was in Sweden, 4x. Full participation. I'll show a little bit later on what that means. Catch up and therefore waterfall. I can strongly recommend that when you are looking into these cases, even your own case, try to calculate the waterfall in case of liquidation. I will show you a little bit later on how it's done, because we have had a number of founders who had been very surprised to learn the actual value of common shares after saying yes to Pref A, Pref B, Pref D with and without participation and 4x. you do simply need to do the math because the value of the shares could be reduced dramatically. So this is tough times regarding preference participation. Then, of course, we have in our portfolio companies seen down rounds, simply necessary to reduce the valuation to attract new money. We have also seen ratchet clauses, meaning that a new investor are setting up goals or terms for, as you mentioned, the SaaS revenue. And if you do not meet this SaaS revenue, you have to make new shares to that specific kind of investor, meaning that all other investors will be diluted. That's tough game. And if they are not done correctly, and I can say from lawyers, attorneys, they are good to what they do, but they are not that good with numbers. So normally they write something, and when we ask them to explain what does that mean, we have a variety of attorneys who have not been able to tell us what they actually mean. I will give you an example later. And actually we have had the experience with the valuation in a down round where they have a Dutch auction. That's not funny, that's sad, saying that if you invest in week 1, the valuation is this. If you wait, simply showing it's a little bit tough times nowadays. And then, of course, the last one, multiples. What multiples are we using for valuation these days? Even revenue or EBIT? I will come back to that.
Question about this.
Yeah.
These changes. Have you seen any trends? Are they geographic? Like in some countries it's tougher terms? Is it sector-based or is it sort of random in that sense?
Yeah, it asks whether it's specific regions, specific branches or areas. And basically we have seen in different countries, in different industries, so we can't see that it's more or less. The ratchet clause we have seen has primarily been to the SaaS revenue. Because probably due to that, some companies has their specialty in investing in SaaS industry, and then they will make sure that all these optimistic budgets are actually taking place, and that could be a way to hold the founder accountable. Just a little bit about waterfall. We have here a normal cap table, starting with the company in 2019, and then you can see over the time, you are getting new share class, A, B, C, and D. Latest one in 2022, having 20% of the share capital now. You can see the characteristic for the share class D is that you have a 3x liquidation preference, you have a pro rata participation right, and you have full catch-up. Let's skip to this part. When you do the calculation, you do the waterfall, you say who will get the money at what time, first A, first B, and so forth. Then you can see that the D class will actually get, they invested 20% in the company, but they will actually get 36% of the liquidation preference. So I will definitely recommend to do this math. It's not that easy, but it's doable. Make sure that if you are a founder or an early investor, make sure what is the value of the common shares. Because when you are saying yes to early investors going with these special share classes, it will definitely have an impact. And the impact nowadays is even higher because if you are going for an IPO, all share classes, as you know, will be treated equally. There'll be money enough for all, so no problem. If you are making an industrial sale, then you will have to calculate the waterfall. And I can say that more than 5 times, people we have been talking with as founders has been, to say it mild, very surprised when they realized that the value of the common shares was not as they expected. So one of the key lessons from today is the waterfall. Make sure that that you do that when you invest or when you take new investors on board. That's very, very important. Yeah, an example for a ratchet clause. I can some numbers, but I'm not that good. So you definitely have to calculate. This is simply an anti-dilution, as I mentioned before, relating to some kind of revenue, saying if you not fulfill the budget for the revenue, then you will be diluted by this, simply issuing more shares. And that would probably be related to companies who are investing with SaaS revenue. This is an example of a ratchet clause, which I do think from a legal point of view is doable because it's quite precise what will happen. I have seen some more fishy ratchet clauses, which I do not think actually will be enforceable, but this one should definitely be. But also this means when you do the calculation as a common shareholder, you will be impacted by what happened here with the ratchet clause. And I do think actually that's the last observation point. Multiples. From Adventis Advisors, first half year 2023, have this slide regarding multiples, both on revenues and EBIT. And we can see from 2022, there has been quite a drop in the multiples on revenue, and also a slightly fall in multiples regarding EBIT. From one of the companies we have been looking into, the red one, what is interesting to see here is that actually over a period of time, they said that the mean for multiples on revenue is falling until 2024. And it's also the same picture we see in EBIT also falling for the next year. And that's probably a good sense about how the market in general are looking at the current situation and also what we could expect in 2024. Now there's time for question again. Please. Yeah. Yeah.
So you've done fund 1, fund 2. When you go to do fund 3, will you change anything? Have you learned something that comes as a surprise in policies, terms, and focus, whatever, structure?
I do think when we go to fund 3, we will definitely take some takeaway. And first and foremost, we would consider to have a mandate for making follow-up investment, because when you're only making secondaries, you are not allowed to buy follow-up. So that we would definitely consider. As I probably forgot to mention, in Fund 2, we have the opportunity to go 10% out of our normal region, so we could basically make an investment in Spain because we have this 10%. Of course, we would like that as we would like to do that also in a fund 3. But I do think the main topic we will say is we would definitely like to make follow-up investment until a certain stage, because especially at times like we have today, it's a little bit unpractical to say it like this, that you are not able to participate in primary because it could be actually a quite good investment to do a primary. We have done some blended deals if the secondary transaction is together with a primary and the average discount is within our investment policy, we have been able to participate. But I do think we will do it more specific in Fund 3 that we have this opportunity. Yeah. Please feel free to ask any more questions about what we have. Yeah, please.
The last slide, it was like often.
Yeah.
Like those were like tech companies in general, but for hardware and software, those multiples are actually different. So was that like a blend?
This is a blend. This is a blend, and the red one actually it's more hardware. So the first one is tech companies. So of course it's you have to do, as you said, you have to look to specific industries to get a hinge. But I also think regarding a takeout and what is very important right now is, of course, when you are looking besides the multiples regarding the valuation, is simply to see the runway. What is the runway for the next period of time? The rules for auditor has been changed. Normally, when you are providing an annual report with a stamp, you are only stating liquidity for the next 6 months. Before it was 12 months. So definitely, as a reader of an annual report, you have to do your own calculation to make sure that the runway is efficient. Otherwise, you will learn that you have to take this bridge finance and possible down rounds, possible some kind of dilution, share classes, as just mentioned. But you are totally right. You have to look into different industries and sectors. Yeah. Yeah. Any more question?
What has been the hardest discussion with an LP? Like, I don't know, hard questions,
Yeah.
or somebody sort of wants to leave the fund, or I don't know, what might be the...
It's difficult to see to see generally, but I can see, of course, as you also mentioned, we have had discussion about the management fee, of course. Yeah, because that's understandable. I don't say that I don't understand the other issues, but it's money into the company upfront. So of course, it has been not the hardest, but it has been an issue. It has been an issue. Yeah.
So sometimes it's said that the hard times are the best times to start a startup. Is it also true for funds?
Yeah. I will say it like this. I'm happy that we are not in fundraising right now. And I'm happy that we have only invested a third of fund 2. Both, it will take some time before Fund 3, but also actually it gives some very good opportunities. We are presented for what we could call very interesting cases you probably didn't see 2 or 3 years ago, because now the founder can see, I cannot make the IPO as I expected. So let's sell some secondaries, put the money back in our system, and then we can prolong our runway, and then we can go without taking any more finance to an IPO in 2025, 2026. And that is basically what we like to see now. That it's more mature companies actually we see with a very fine revenue and also very fine EBIT, but it's very difficult to fund it otherwise these days. Yeah.
Reverse Kadri's question and ask what has been the best thing. So what has been the strongest messaging that you felt has really resonated with the LPs, sort of your best selling point that made them sign in the end or something?
The best selling point, it's not a specific thing, but it took 18 months to establish Fund 1 with 50 million. It took half the time with Fund 2 double up. And that was, of course, due to 4 exits within a very short time of period. So what you should do is walk your talk and not talk your walk. So talk with your feet. So that's basically that. And of course, the most important, because as I mentioned, Peter and Frank and I are a little bit gray. So we have learned that people, you can tell them everything, but they will evaluate what's actually happened. So you have to, and that's quite banal, but yeah, it's important.
That was second fund. What would you say for the first fund when you didn't yet have those exits? What was then the sort of thing that got you across the line?
It took more time than we expected, and there's some catch-up when you get the first. When we did the first partly closing in Fund 1, then things basically were booming. So the first 10 is definitely the hardest one to get them.
What was the difference in closing sizes, like the first closing and the final closing? Like how much risk did you take with the first closing?
Yeah, we started to invest actually when we have made the first closing.
What was the percentage of the full final close?
The first closing it was roughly 30%. Yeah. And yeah.
So you said you wouldn't want to fundraise right now. Do you feel this when you do capital calls as well? Do you get paid from LPs that please don't call in capital right now?
No. Actually, we have, as I showed, the investor base is quite solid. So the latest we have waited for a capital call is 5 days. 5 days delayed. That's very satisfied, and I do think with 250 it was less than 5 saying we will pay next week. It's very okay. So we haven't had problem regarding that. So that's not the reason. That's not the reason why. Yeah.
How much do you advise the LPs to keep in reserve for like future drawdowns? Because like we just got a request that like the price of money is up, right? So like how much should they actually reserve? So we said like 6 months, at least for 2 quarters. So please keep it ready for drawdowns.
We will normally tell them in the beginning of the year whether we will make 1 capital call or we will make 2. And what we have decided due to the times now is that we will use the extra year for the investment. So basically there will probably be 1 capital call next year and the year after. But normally we'll give them a good heads up at least 3 or 4 months before, so they will definitely use it. And we will call the money and we will have them at our account. So we will not call money every time we have to make an investment. We will have it placed on our account. So I do understand that some funds are working that every time you make an investment, then you will take a call, make a capital call. We do not do that. We will ask for 20%, and then we have this to invest in the coming year. So we do not have to wait for this. It will also slow a little bit down to make things, but so we have done it the other way around.
I have a question about your pitch deck. I understand you can show it, but I mean, what have you changed from Fundraise Fund 1 and now Fundraise 2? What stayed and what was added, sort of based on your experience?
Yeah. Fund 2 was there was more documentation. Yeah, definitely. We in Fund 1 we have this investment agreement. Actually, we have some of the issues from the investment memorandum. Actually, we decided to make it in Danish, and then we translated it to English. And it was quite a funny process because actually it was decided when we do Fund 2, we should use one. I did Fund 1 as a boutique law firm, and then it was decided that we should use a Tier 1 office. So that was quite fun because normally that they will do it in English and say we will come with the normal 300 pages. I said no, let's try it in Danish. And actually they were surprised themselves because actually our documentation became less than 30 pages, showing the difference between the local language and English. So that was also a call for them. Actually, they find it quite interesting to be able to do it quite concentrated. So yeah, so more documentation in Fund 2 than Fund 1. Yeah.
But I mean the pitch deck, the sort of the slides you're showing to the LPs when you start the call or a meeting.
Yeah.
Have those changed, sort of? Understandably, like in the second fund, you could also already
use
show exits.
Yeah.
But sort of like, what are the, I don't know, 3 or 5 key things that you definitely want to say?
No. They have actually not changed. Yeah, basically the same. Because our raison d'etre, the reason why, was to support the ecosystem, as mentioned. Yeah. We are going, and that has been both in Fund 1 and Fund 2. And then, of course, we could, as you say, use the exit just to icing on the cake. But basically, it's more or less the same. More or less the same. So it's primarily the documentation. Yeah.
So you have a fairly large LP base. Have you discovered who's a bad LP, who you maybe don't want to work with?
It's not to be just a happy man. But basically, we haven't had experience regarding that. Of course, we have LPs who is asking more questions than others, especially when we are calculating net asset values, saying is that correct and so forth. But it's simply not that many. So we haven't had bad experience. As I said, we have to inform about the write-off by Aurora yesterday. And when I came to this building, we have received less than 15 emails regarding that. And most of them understand, okay, shit happens, sorry my friends, but yeah, they know the game. And then I saw one would ask to have some additional questions. So no, we can't say that, we can't say that. And I do think that's due to the personal relation. All investors know Peter, Frank, more or less. So there is a personal connection.
Okay. Can I ask it differently then? Were you talking to potential LPs where you decided they have money, but actually we don't want them?
Yeah, that we have done.
And
that
why was that?
Probably to reputation risk. The documentation and the rules are that all investors should be approved by the general partner, yeah. So that's basically that could be a potential reputation risk, and we are not willing to take that. Not a huge number, but we have done it. Yeah. Yeah.
Do you expect a slower pace of exits considering the current markets, and how does that affect your long-term plans? Because you already had 4 exits in the first one, so that was probably a boost for your investment pace.
I can say that as I mentioned, we are quite close to our portfolio companies, and we are quite optimistic about exit in the coming years. We are that close, so they share these information with us. So we are quite optimistic / happy that something good will happen next year and the year after. But of course, things can change. But we know that they are working actively on exit scenario one way or another. So yeah. And that's also a part of the due diligence now. We've been all the time, but we are asking more specific into the question regarding exit strategy, even either an IPO or industrial sale. So we are definitely looking into that. Yeah. No question online as far as I can see. Nope.
I guess we can wrap it up. So,
There actually is one question.
Yeah.
There is one question.
Yeah. It's not gonna come there. I will just.
Okay, it will be on this.
Mä ei saa sulla.
Okay.
Yeah, actually, it's on the screen now. Relating to the admin burden versus LP network value for Fund 3, will you keep 220 plus LPs or go for fewer, larger LPs? Yeah, difficult question, good question. We saw the correlation, Fund 1 to Fund 2, 80. Of course, we will not say no to investors who we know. So if Fund 3 will be the same numbers, it's very fine, because then we know. But of course, to start up, we would definitely like some larger LPs. So it will not be a problem with 220 again, because now we have the system, we have the reporting format, and we have the annual meeting set quite okay up. So it's not that problem. So no, a little unclear answer, but that's the best I can do. Yeah.
So in case there is no more questions, I would really like for you, thank you, Henrik, for coming and sharing your experience. It was really, really interesting. We can see how you guys have done a great job, and I really believe that the sort of emerging managers from Estonia and in the ecosystem can really benefit from it. And if I can promise, then whoever wants to reach out to you later, because all of you guys, I know all of the partners from the fund are always so happy to work with the Estonian ecosystem and share the experience. So we will share the recording as well as the slides later, also with everybody that are registered. So thank you, and see you in our next masterclass with Norway in November. We will send the dates soon. Thank you.